Imagine in just 10 short years going from bankrupt all the way to having $20 million in your real estate investment portfolio. That's the story of Mike Nuss. Today in this episode, we dissect what did he do to go from all the way from zero to hero in a relatively short period of time. He's going to not only give inspiration, but he's going to give a framework, principles through which you need to build your business upon that will allow you to do that even faster than he did. This episode also gives you a sneak peek at the Portland real estate investing market. When there's some question marks about what's the long-term prospects of Portland going to be, Mike answers those questions. You're going to want to hear this episode and share it with a friend. Enjoy. Welcome back to the Think Bigger Real Estate Show. I'm your host, Justin Stoddart, here this morning to help you recognize the value of being around big thinkers. I have with me a gentleman. His name is Mike Nuss. He is a real estate investor, appraiser, just all around big thinker. We're going to hear his story of how he went from kind of small thinking professional to now all of a sudden everything in his life is changing. I'm so excited to introduce you to him. Before I do that, let me just remind you that I take small snippets of each show as well as key takeaways, key action items, and I put them in the Think Bigger Real Estate group on Facebook. If you're not yet a member there, be sure and go sign up for that group. That's a place where we really make all of this content very digestible, very implementable. I'm really excited about what's happening there. Let me get back to today's guest. Again, Mike Nuss, thank you so much for coming on the show today. I'm excited to hear your story and have people in the Portland area and beyond. Our audience extends beyond Portland, of course, but to kind of hear how you've done what you've done, built a brokerage, built a great real estate investment portfolio, built an amazing culture, just lots of great stuff we're going to talk about today.
Man, I'm so excited to be here. Thank you very much. And yeah, small thinking professional. It's a great, definitely not a world I want to ever be back in, but I was a small thinking professional for a long time, and I'm happy to now think bigger and be on your show and kind of share some of the thoughts around that. So thanks for having me.
Yeah, you bet, man. It's exciting to hear. I mean, you were an appraiser, right? Kind of tell us your story. You got started in kind of what year as an appraiser, really learning the ropes, right?
Yeah, so I started actually in high school. So my senior year in high school, I job shadowed my uncle who was an appraiser during spring break, followed that up working weekends, and then the Monday after graduation, rolled right into real estate appraisal. So right out of high school, moved to Portland in '97, and then started that, professional career. At that time, I wasn't really excited about real estate. I was excited about the opportunity to get started early in what could potentially be a great career, and then also be in Portland, which was a city I always wanted to move to and be part of. So, I went in with that, and then I stayed a small thinker for a long period of time. And I'll give you more updates. So '97, then I bought my first house in '03. And I bought that as a short sale. Didn't know what short sales were at that point. House hacked it. Didn't know what house hacking was at that point. So kind of lucked into it. My first good investment. Then I started my own appraisal firm in 2004. Okay. And so then, I was an appraiser, wanted to be real estate investor, back into now a business owner, the 4 quadrants of Kiyosaki's cash flow quadrant. I'm trying to focus on that self-employed world and build it into a business. Got pulled away from investing, but still bought some stuff, and then learned a lot about cash flow during the Great Recession and how actual real cash flow on a month-to-month basis is a lot different than doing your taxes every year and using depreciation and principal reduction as a way to justify negative cash flow. Learned those lessons, and then when Dodd-Frank came around, my income was cut by 80% because I was a small thinking professional. I wasn't aware to the changes that were happening around me. So I think that was the big wake up lesson of, looking at the big picture, not just, looking at the forest and not just staying in the trees. Just learned some lessons there, then transitioned to real estate investment, 2010, kind of full time. And then really I met my business partner in 2010. We got some real traction on the investing side in 2012, and then just kind of took off from there. So, now we have a brokerage, property management company. We have a pretty large portfolio. We run a networking group called Investor Lab, which is for education and networking for investors. I'm a commissioner on the Rental Services Commission, so I'm pretty involved in the political level from a landlord-tenant law standpoint. So, definitely a small thinker for a long time. 2010, I started to wake up a little bit. And then the past 2 years, really kind of saw a bigger vision and really jumped into, becoming a high achiever, self-development, that type of stuff.
What did that look like? Because I think there's a lot of us, right, that are professionals. We've gotten really good at what we do for a living. Yet we realize that there's a bigger world out there, right? That there's more opportunity than maybe we've experienced so far. What did it look like for you when you went? Was it 2010? Was it the whole Dodd-Frank thing that all of a sudden income was slashed significantly, and you're like, okay, I just got handed, like, and I've got to figure out a way to create a better situation for myself. Was that kind of really the turning point where you suffered kind of a large blow to your portfolio?
So it was, for me, it was in 2009. So in 2009, I just was unhappy with real estate appraisal. I loved the people aspect of it and education aspect, because, from 97 to 09, I really focused on becoming an expert in that arena. And so that led to really good conversations and educating agents and brokers and whatnot. And I realized I got a lot of joy off the communication aspects of appraisal, but not the day-to-day aspects of real estate appraisal. Then I really always wanted to be in real estate investment, which has a much larger impact from the conversations you have, the people you can employ, the housing you provide. It's just a much larger impact. So I knew I always wanted to get go that road. But in 2009, it was, I heard a Rich Dad Poor Dad commercial, and I went to a free Wednesday night, and I paid $500 for a 3-day weekend. And then in 2009, at that 3-day weekend, I got bamboozled into writing a $26,000 check for some other real estate education. But I remember coming home that Saturday night of that 3-day weekend and telling my wife, and I was putting my daughter down to bed, I was laying in bed with her saying, I want to be a motivational speaker. And real estate investment became the platform for that. So I started making the steps late 2009 to transition to investment full time. Met my business partner in 2010. Started flipping some houses. And then in 2012, we launched kind of the first make of that networking and education group. And so since 2012, that's been the platform then to be a motivational speaker, or at least an educator in the real estate field. And then you realize the impact that you can have on other people when you get to that level, right? Because I've had some success on the investing side. I know a ton from the valuation side and how markets work and all that. And then you start seeing people do their first real estate deals. And then you see people become millionaires. And then, that just grows and grows and grows until you realize, you look back and you're like, oh my gosh, we've got a pretty large business operation. We've got employees that are meeting their life goals, a network of people that are meeting their life goals. And then you realize that day-to-day life now is really just riding that wave of momentum of success and paying that forward, dropping the rope down so other people can, learn from your mistakes and have faster career and success. So that's kind of my thought process on it. To answer your question, how do you start thinking bigger? For me, in 2010, I joined I paid, again, some more real estate education. I went to Florida for a week-long real estate course. And that put me in touch with a lot of different real estate entrepreneurs across the nation. And so that was one of the first times that I realized how important networking is and the value of having access to people that are doing things you want to do, but you're not currently doing. So 2010 was the first elevation to that. And then in 2018, about 2 years ago, I joined GoBundance, which is another higher level of a national mastermind networking group. And, then you get around people that are doing things much larger than you and have a much bigger mindset when it comes to family life, donating, living a life full of adventure and stuff like that. So becoming comfortable as an expert, that was a big step. I think a lot of people have imposter syndrome. So the first part of my career is becoming an expert, being comfortable in that, and sharing that expertise, and then getting around other people that can share expertise with me. And then that becomes kind of that self-fulfilling roller coaster.
It almost sounds like there was a pain point for you, right? Where it's like, okay, this life that I've built for myself doesn't withstand the market blows that are coming at me. I've got to think bigger. I've got to demand more of myself. And you realize you came to a point where it was like, I don't know how to do it, right? And so even though you put down some money, maybe with the wrong organization at first, right? I think oftentimes I see when people are serious is they actually make an investment, like that actually financial and time commitment to say, I've got to make things better. Because we can dream all we want, right? We can say, yeah, I want this. We can have dream boards and goal boards and all kinds of fancy stuff that remind us. But at the end of the day, I feel like people are really serious when they're willing to part with their own hard-earned money to say, teach me, like you said, to get access to information or to get access to people, right? And I see that kind of a similar pattern with you. It's been a similar pattern for me where I'm like, I'm willing to invest money to gain access to this person because I know that they can help me.
Oh, for sure. You know, I think essentially that's what college is, right? I mean, you pay a big degree to get around people. The education may not be great, but your network comes out of it. And I didn't go to college. I went to some community colleges. And so my way of then buying that is different networking groups and masterminds. And, you know, it'd be great to not have to pay money, but I think you're right. If you make that commitment of writing a check, and everyone in the organization made the commitment of writing a check, now your hours look different there. You know, it's not a volunteer purpose. It's I've invested in this and now I need to put in the time effort to really make that investment work. So I think you nailed it. That definitely helps. You know, I'll skip that. That kind of sidetracks, but I think it definitely helps to put something on the line to then drive more activity in the direction you want to go.
Yeah, that's awesome, man. You know, I'm seeing here, like your accomplishments are again impressive. And for you, it almost sounds like that really started 10 years ago. I think that gives people a lot of hope, right? That you had obviously built a lot of knowledge. You'd, like as an appraiser, you'd really positioned yourself very well. And I think to a lot of maybe real estate agents that are listening right now, they might feel like, man, to have the kind of portfolio and access to the kind of networks that Mike has, like it's out of reach for me. But I think like the next step is never out of reach. I mean, what I hear you saying is that you got really good at what you were doing for a living. And I think for real estate agents, I always encourage that part of their annual business plan ought to be, what are you going to do this year when it comes to real estate investing? Like that's your retirement. That's your future money. What are you doing right now this year? Whether it's, I'm going to get really familiar with what kind of properties I want to invest in. Right. And so I don't want anybody to leave this feeling like, man, I can never be like Mike. That's a great song, by the way. But I can't take one step in that direction, because yes, you can, right? Like there was a point where you were just like many of the people that were listening here today, which are like, you weren't set up. You didn't have these big networks. You didn't have this great knowledge. You weren't a super savvy real estate investor, hadn't built a brokerage and a brand and a team and a culture and a whole networking group around. Like you hadn't done that yet. Right. But like in the past 10 years, right, you did that. And before that, you just built up some expertise and some knowledge, right, in a certain area. What else would you say to people who may want to be in a kind of the enviable spot where you're in, yet are feeling like, boy, I just can't ever get there. It's too far away, too far out of reach.
Yeah, the power of the compound effect, right? So incremental changes, everything that we've done. So time's the cure all for everything, right? Incremental changes, they just compound into huge success stories. So, you know, one thing I didn't mention, I was bankrupt in 2011. So when I transitioned to real estate investment, I met my current partner through a different partnership where the people that control that partnership stole all the money. So I made it through the Great Recession and then had to file bankruptcy. And then those people also stole money from my business partner who were lenders. And so when we started our partnership, we had to go back, you know, I had to file bankruptcy. He had to go to some lenders and say, hey, your money was stolen. I need you to pull a lien off a property so I can sell it, but trust me, I'll pay you back. So, I mean, talk about starting from behind the gun. That's how our company started. But we just make incremental changes, incremental steps, right? We know land development, so we'll buy one land development deal and see how that goes. We can flip some single family homes. We bought a triplex together. It was $2,000 down to buy a triplex in Tualatin. You know, then we bought a commercial building that was zero money down on a seller finance deal there. So incrementally, we started making small changes to get out of debt, to get some income going, to build some development projects, to buy a couple investment properties. And then by 2014, 2015, we then became bankable. We had other partners that were lending on short-term development projects that wanted to own real estate with us. And so then we turned them into capital partners and then started syndicating small transactions. And, you know, you look back and over essentially an 8-year period of time, we built about a $20 million real estate portfolio here in Portland. But I never, you know, that was never the goal. Hey, I'm going to be this amazing property owner. Of course, we want passive income, and that's something that we shoot for. But really, it was just the focus on let's just get the next step done, get the next step done, next step done. And then you look back, you know, so for 13 years, I didn't do much. The 10 years after that, I've done a lot, probably 3 to 4 times the amount than I did in the first 13 years. But a lot of that success has come in the past 2 to 4 years, right? So you get to that point of no return, or the tipping point. You get to that tipping point where you get to a point where you can actually take your foot off the gas a little bit, and that momentum pushes you faster than you were the years prior. And then when you take your gas off the pedal a little bit, now you realize you just have more time, you have more clarity, and then you can start working on other things in your life as well. So we spent a lot of time getting our businesses off the ground, but during that period of time, I gained a lot of weight. I wasn't living the lifestyle I wanted to live. So when I joined Go Abundance in 2018, business was doing really, really well, but me from a mental, personal health standpoint wasn't great at all. But because I could take the gas off the business side, and all the employees are running that in a well standpoint, and momentum still going there, now I can focus on other parts of my life, from how I eat, how I exercise, how much I move. And then that creates a whole nother compound effect when you have your personal life, or your personal vision, and the lifestyle you want to create, that then merges with an amazing business that's doing well. And then they just feed off each other. And so I'd say the past 2 years, I accomplished more than I did in the previous 10. And then, that was 10X the previous 13. So, in 1997, when I was 18, did I want to have, a lot of passive income and a large portfolio and a good business? By the age of 40, sure. But I didn't look out like I have to do that right away. It was just, well, buy my first house, start my first business, buy my first rental property, do my first bankruptcy, hire our first employee. In fact, hiring employees, that was a huge learning curve for us, where I think we went through a couple different business coaches trying to figure out that curve, because it's not real estate related, completely different level of leadership. My ability to analyze a market does nothing to keeping an employee happy and employed. So you know what you learn what you don't know, and then you go get the knowledge to do that well, to get to the point where then you get to another spot of you know what you don't know, to then go get the knowledge that you need to know that better, and it's a progress that you go through that.
It's inspiring to hear, right, that you can build that quickly. And I do believe it is, like you said, as you described, like a hockey stick growth, right? Mm-hmm. It's not just a flat line going up. So I think a lot of people, a lot of us, we'll get kind of discouraged that like it's only growing at such a small pace, but all of a sudden it then builds on itself really quickly, right? That it is time, but there isn't equal growth throughout that entire time, right? It quickly compounds on itself, like you said. I love how you shared that. Talk to us a little bit about now that you have a brokerage, now that you have an investment team, now that you have, you've shared with me that you've learned some things about leadership, right? Kind of about building great culture. Kind of talk to me a little bit about what that means for people that want to get to that next level. That if you could go back in time and talk to Mike Nuss 10 years ago, right? What would you tell yourself when it comes to leadership, when it comes to culture, and those things that help you attract the talented, whether it be employees or whether it be the attractive network around you that surrounds you with the right people to take it to the next level?
Man, I got a lot of thoughts on that. One, like I feel a lot of people, we go back to imposter syndrome, I mentioned that. I feel like for the longest part of my life, I had to feel like I had to get somewhere before I could claim I was an expert. So I was interviewing Ben Hardy just the other day, and in that interview, as I mentioned, maybe a year ago, where I was comfortable saying I'm an expert, or I'm a leader. I just wasn't comfortable in that. But the reality is, if you look back, I was a leader through all this period of time. I was just a leader by example. I wasn't comfortable by saying it, right? So there's one thing of being a leader by example. And when I say that is you have an extreme ownership in what you do. You make a mistake, you own up to that. You have clear communication skills. Man, where am I going? So you can be a leader before you get to a point just by being open and being honest. I think so many leaders out there want to hide information from people. right? Because that's their secret sauce or that's what you do. That's not how I've ever been. I've always given all my education or my knowledge away for free. I've always told people when I've messed up. I've always been, I wouldn't say always, I've gotten much more comfortable about being more emotional, about letting my feelings be heard, because that's how we connect as humans, right? And I guess I've studied a lot on physiology and psychology, but people ultimately want to connect and they want to know that they can trust you. And if you're hiding things from them, they can feel that. If you're not connecting, they can feel that. So being open and honest and vulnerable, I think is, that in and of itself is just great leadership. A book I'm reading right now, it's called The New Alpha Male, written by Lance Allred. Amazing book, because it's all about, the alpha male we used to think was this, the guy at the gym and all that stuff, where quite frankly, I was in sports a lot. I was always team captain, but I was the lead by example guy because I wasn't the alpha male. We're in a whole different era now with technology where you don't have to be that loud, boisterous, buff, tough guy. You can cry in front of people. You can share your faults and your failures with people. And that actually creates a level of connection and trust where then now you can build forward together. And then the other thing is just getting around people that have leadership skills so they can help you realize where your faults are. If you don't understand where your faults are, how can you improve as a person? And a leader is always improving in my mind.
I think I see some interesting things here that I want to point out. That again, if you look at the success that you've had going from bankruptcy to now the investment portfolio of $20 million in properties, right? That seems like a rapid change from where you were to where you are now. And I would say to people that in order to facilitate something like that, number one, having expertise in something prior to that, right, kind of led you to that. I would even add, one of my mentors says that he's met investors that will not invest in anybody until they've had at least 2 major failures because they don't understand what failure looks like. So they're more inclined to walk into it again, right? If you've been there, it's like, boy, I've been down that path. That feels and looks like the last time I failed, I'm not going that path again. And so I think that there's actually some benefit to those that have failed and stubbed their toe and maybe even fallen and, crack their head open, like whatever that looks like. It's don't be so hard on yourself if that's been you, right? And then I also see in your story here, Mike, that there's these underlying principles that have really built the foundation. There's these principles by which you live, kind of your moral compass of how you treat other people, right? And all of that, I think, only accelerates or it allows you to build something on a solid foundation. Because if you're not that kind of leader that attracts people and gives knowledge, right, and really is there to serve and lift other people, not just yourself, then soon that will all come tumbling down, right? Because the people around you will start to be like, look, I'm not here just to build your hero story. I'm not here to build a statue of you. I actually have my own life and my own dreams. And I think if people don't feel like you're committed to helping them also win, then they won't be there for long, and you're going to have constantly this turnover. I don't know if any of that resonates kind of with you and kind of my synopsis and summary of how you've done what you've done, but I'm super interested in learning this because I think all of us can learn a lot and benefit by having our stories be similar to yours as far as the trajectory that you've been on and going from, a spot that wasn't enviable to now a spot that's very enviable.
Man, no, you nailed it. You look at so 3 of our core values: listeners, educationers, givers. Listeners, educators, givers, right? It's exactly what you went into. So we listen, we listen with authenticity, not to respond, but to hear you. We're educators, all about educating people, typically through failures, right? Successes inspire, failures teach. And we're givers. At the end of the day, we really want things to be fair. And I think that's pretty unique in the real estate investment world. And I think that's one reason that we resonate well with people. And that's the reason we created Investor Lab, that networking community, because real estate investors get a pretty bad rap in the real estate community because typically they have a non-infinite mindset, a finite mindset where they just want to win. The Infinite Game by Simon Sinek, I think, is a great book. And I think that relates to real estate so well. It's not about, transactionally, we can say we need to win each transaction. It's not about that, right? It's about building a book of business. It's about keeping momentum going, and you don't have to win everything. You just need to succeed and keep it going and keep it going and keep it going. And I think being a good listener, being an educator, and being a giver is the way to do that on a daily basis.
Man, those are such powerful principles. I've been going through and actually doing some kind of deep business planning for the rest of this year and next year. And one of the things I've really committed to is to be a better listener, actually be present when other people are speaking, right? Not in my own thoughts of what I'm going to say next, but really, really internalizing deeply what they've said. And I see that as being a core value that's helped you to be and create the success that you have. Mike, we've got just a couple topics I want to cover before we go, and I know we're running out of time. Obviously, you are very in touch with the Portland real estate market. I'd love to hear your thoughts on where you feel like it's going. Obviously, we're in some different times than we're used to, both social unrest, right, in Portland, as well as the pandemic. So what has that done to property values, and maybe even what do you feel like the opportunities are at this point?
Yeah. First of all, so markets all have segments, right? And so you mentioned civil unrest. The condo market is an example of a market that is unlike any other market segment in Portland right now, where everything pretty much for Portland is everything's going really, really well. Well, the condo market in the Pearl District in the downtown, you've got civil unrest. So that creates a market segment that's not doing well. The rest of the market, we haven't seen normal market conditions outside of like halfway through 2018, summer of 18 to summer of 19, we haven't seen normal market conditions since 2003, right? We saw an exacerbated market going up to the Great Recession. We saw an exacerbated foreclosure-ridden finance market after that. And then we've seen an exacerbated market come back up ever since that due to inventory levels, interest rates, all that type of stuff. So right now we have an extremely exacerbated market. Now, if you're buying a personal residence, you're going to hold it for 10 to 30 years and interest rates are ridiculously low, paying 5 or 10% more than what a house probably really is worth, that's not a big deal in the grander scheme of things.
You make that up in a year, right?
Exactly. Now, transactionally, if you're a house flipper and you don't have experience with the market and you're like, oh, but all these comps just sold in the past 30 days, and they're saying I can resell this house at 450 grand. I just had this conversation with one of our brokers the other day, which is, okay, well, what would it have sold for last summer when supply levels weren't under 2 months? When we had, you think about it, like we'll go to the latest market action report. I see a lot of brokers saying, oh my gosh, most closed sales we've had in 1 month in 13 years. Okay. But we had 3 months where we had half the sales volume we should have. So doesn't it make sense that we'd have a month that just has ridiculous record volume because all those buyers just weren't transacting? Just like when after Corona hits, supply levels actually spiked. Well, inventory was ridiculously low. So supply levels isn't a reflection on inventory. So even though inventory is really low because buyers pulled out, supply levels spiked. So we're not in a normal market. We're in an exacerbated market because we don't have enough sellers. The buyers have ridiculous purchasing power, so effective demand. We talk about supply and demand, but there's levels of supply and demand. When you get in demand, it's effective purchasing power. That goes into incomes and interest rates and median prices. So incomes went up, interest rates went down. So even though prices are going up, affordability's gone up. So we have the most affordable market we've seen in the past 6 or 7 years. There's not enough inventory out there and people want to live in Portland. So what we have is this really hot real estate market, multiple offers, yada, 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 all that stuff. For me is, when's that shoe going to change, right? So we have record unemployment, record jobless claims, record bankruptcies. There is a lot of negativity in the market that just hasn't shown up yet, right? And so I've been comparing this to a hurricane where we went through the first part of the storm. That was relatively easy. Stock market's already recovered. We've been in the eye of the storm for a really, really long time. We've had stimulus, a really good real estate market, low interest rates, yada, yada. That back end storm though is brewing and something's gonna happen eventually. I don't think it's gonna be like 2008 where we had just a bad structural finance foundational portion that crashed the real estate market. We have good fundamentals. People have equity. Interest rates are low. The Fed is reacting in a completely different way than it did in 2008. But the downside is they're just pushing the pain out. At some point, we're going to feel some pain. We've got a foreclosure, an eviction moratorium. We've got a foreclosure moratorium. that stuff will end in March, April. Then you've got NODs that need to get filed. So the more policies we have in place, they just push that eventual pain down the road. And so from an investment standpoint, it's actually kind of nice, because when have you ever had a year's heads up to, hey, the market's going to crash at some point? And you have these little incremental notices along the way that, you get another 3 months here, you get another 2 months here. Like, from an investment standpoint, that's really good. So I think that eventually inventory is going to go up. Downward pressure will happen on prices. We're just not going to see it in the next 3 to 4 months, because there's just no way that can happen so fast with the political things that are happening to keep pain from being felt.
So you believe Portland's good in the long term as well as short term? You're seeing opportunities.
Even just take the small form debt cycle out of play. Long term, we don't have enough housing. Our immigration is still projected to be high. Josh Lerner from the state of Oregon, he revised immigration numbers like a month, May or June, just revised immigration numbers that brought our population down a little bit, projected population down a little bit, but it's still up. Housing permits are down. I mean, if anything, this exacerbation we're going through is going to lead to more of a supply-demand disruption, meaning not enough housing for the amount of people we live here, which just, housing households versus housing units, that's never going to be in a spot in Portland in the near future where that puts downward pressure on pricing. Economics, jobs, jobless claim interest rates, they can do that. But households and housing units will always have this slope. So from the long run, I'm way happy holding my portfolio here. I know a lot of people that say you should get out of the Portland market. No, not only are we staying in Portland, we're doubling down on our investments in Portland.
That's great to hear. Mike, let's jump to the last question. In fact, before I do that, how do people follow you? I know you guys have kind of networking groups. You have all kinds of stuff. People are like, man, I'd love to learn from Mike. I need to up my personal network when it comes to real estate investing. Will you tell us, before I jump to the signature question, how can people find you, learn more about you, be mentored by you, all that?
Yeah, so Investor Labs, the easiest way to follow us from an investment standpoint. So I do Facebook Lives every week there. We've got a Facebook page, which is for the public, and then we've got a member site as well with an online platform that we do other Zoom calls, and so really good continuing education stuff there. So that's Investor Lab. And then our companies are Rare Bird. So Rare Bird Real Estate, Rare Bird Acquisitions, Rare Bird Property Management. Those are the best ways to connect. I've got a Mike Nuss on Facebook, Rare Bird Mike on Instagram.
I love it. Awesome, man. I'm excited for people to get more access to you. You've obviously learned some great things and have the heart to want to give back, right? Not just to be out pursuing your own thing, but to actually bring people along with you. I have a good friend, Lou Raja, who says, once I get to the top, I want to be sure and send the elevator back down. And I kind of, feel that in you of like, hey, I figured out some things, like let's help some other people get here as well. It's exciting. Let's jump to the signature question of the show, which is this. You're a big thinker, right? That's why you're on the Think Bigger Real Estate Show. What does Mike Nuss do to continue to be a big thinker, to continue to expand your possibilities? What does that look like for you, Mike?
Yeah, it's who I surround myself with, right? And so you did the quote, you're the average of the 5 people you spend the most time with. So I really have a bouncer at the door, right? And so I really ensure that the people that I'm communicating with on a regular basis are people that give good energy. And they don't have to be smarter than me. They don't have to be richer than me. They don't have to be above me. But they have to provide good energy that keeps my spirits up, that keeps my energy high. And then, like I joined GoBundance, so I get around guys that have, net worths ridiculously higher than me, build companies much, much larger than me. So like for a good example, I joined GoBundance in September of 18. I met my friend now, Mark Schwager, in January of 19, and he said, you need to read this book, Dream Manager. So at the time, I was talking about how we're struggling with our culture and all that. So never would I thought of, go reading this book, Dream Manager, but now we've implemented this Dream Manager program at our company. And, we've got employees buying their first house and refinancing, getting money back, starting, side businesses. So that's an example of, had I not joined GoBundance, I never would have met Mark. I never would have read that book, and we never would have implemented this program in our company. So getting around people that think bigger is the easiest way to think bigger.
Yeah.
It's a lot easier to have someone pull you up than it is to push yourself up, I think. Yeah, it goes with that elevator or throwing the rope down analogy as well. There's a lot of people out there that want to invest in other people if they see the desire and the energy level to succeed. And then once you kind of get that rope and then you have that desire, it's really easy to climb that rope. You just need, some help along the way.
It was interesting when I was talking with Grant Cardone, he said something similar to that, is that the greatest payment you can give to anybody that offers mentorship to you is to actually implement what they're teaching you. He said that's better than payment for them to become a product of your product. That's where it gets powerful, and you want to invest more into those people. And I think that's very kind of indicative of what you're saying here, is like, get around people who want to give and then apply what they're telling you, because it's a good chance that they'll continue to give it, right? They'll continue to give it. And again, that's obviously very true of kind of who you are as well, and offering that. So Mike, this has been a total pleasure. It's been fun to get to know you better, hear your story, and give people the ability to have kind of a frame, like additional kind of hope and inspiration, and a path, even some resources on how to move to the next level, to get to the point to where they're living off passive income, where they're savvy real estate investors, right? And their expertise in whatever it is they do for a living doesn't have to be their only source of income. So thank you for that. Thank you for being a big thinker. Thank you for being willing to come back and, right, send the elevator back down for the rest of us. So it's awesome, man. It's been a total pleasure having you on. And I want to not only thank you, but I want to remind the audience of these three simple words that really kind of shape the mantra of this show. And they are: go, think bigger. Mike, thanks for helping us do that today. Such a pleasure, man.
Thank you. Really appreciate your time, Justin. Thanks for having me.